This free all-in-one indicator is perfect for you if you trade forex, stocks, or crypto. If you want to be a profitable trader, then you have to understand the current trend, where to place your stop loss and when to click buy or sell, and this indicator provides an advanced trend detection tool, exact areas to set stop losses, and super accurate buy and sell labels. The indicator is called the SSL Hybrid, and if you've never heard of it, it's an extremely powerful all-in-one tool, and by the end of this video, you'll know how to get it for free, exactly how it works, and on top of that, we're also going to provide you with a strategy that we're testing and is currently showing insane potential that you can try yourself today. So let's get right into it. First, let's add the indicator to your chart. Click on the Indicators tab on TradingView and search SSL Hybrid. Ensure it's this one by this user. Click the star to save it. Now add it to your chart. Let's quickly adjust some options in the settings of the indicator. So go ahead and click on the gear icon. Now, as mentioned, this is a powerful indicator and is very customizable, so there is a lot of options available. But today we are only focusing on the options we're adjusting to keep it really simple and easy to follow. So let's go down to the ATR multiplier, and we want to change this to 1.5. This will allow us to have better levels for our stop loss. Next, we want to go to SSL1 baseline type, and we want to change this to TMA, which stands for Triangular Moving Average. This will allow us to get longer-term trends when trading. Next, we want to go to the Style tab and disable SSL2. Those are the only changes we will make for now, so go ahead and click OK. SSL stands for Semaphore Signal Level, typically used as a channel for trend trading, but here it acts as the trend detection aspect of the indicator and is referred to as the baseline. It has 3 lines, and when these lines are pink, the trend is bearish, and when blue, bullish. If the lines happen to turn gray, this is because the price is interacting with the baseline, and this can be an early indication that the trend is about to change. There are several options available for how this baseline is calculated. We are using TMA because we want longer-term trends, but if you were more interested in scalping short-term moves, you might want to try HMA, which stands for Hull Moving Average, which can be used to detect trends and exits very early due to the way it oscillates in a wave-like pattern. The arrows are buy and sell labels, and these are independent of the baseline, meaning if the baseline shows a bearish trend, you might still receive bullish signals, and if the baseline is bullish, you will still receive bearish signals. This is because they can also be used as exit signals, depending on how you are trading with the indicator. Next, we have these ATR bands. ATR stands for Average True Range, and it calculates the volatility in the market and shows us the average area price is likely to fluctuate within. This is great because it allows us to see what is the current volatility of the market, and we can set stops at areas that price is unlikely to reach. The first and most basic method of reading this indicator would have you enter a buy position when the baseline switches from bearish to bullish, indicating a bullish trend. So we can take a buy trade and hold the position until the baseline turns pink, which would signify a bearish trend where we would want to exit the market. For sell positions, we want the baseline to switch to pink, and we would enter the position and trail our stops until the baseline changes to blue, signifying a bullish trend where we want to exit the market. However, entering trades like this is not very smart. By doing this, not only will you have significant losses, but majority of your winning trades will be very small in profits, since holding positions until the trend changes direction will cause you to exit positions within a significant retracement, taking back all your profits. A better method of entering trades would have you use the baseline only as a trend detection tool and use the candle signals and market structure for entries and exits. For example, here we can see that the trend is bullish based on the blue baseline. Instead of entering a position now where we have not yet made a high, and it is possible we would be buying at the market high, we can wait for the market to retrace, confirming a swing point before executing. This way the high that is formed can be used as the first target, since we now know that this level will be the first area of resistance. Next, we want to wait for a buy signal on a candle that is still below the swing point. By entering at these candles, it also helps to estimate the low of the retracement, since these signals are estimating when the market is likely to reverse. Now that we have a signal, we can use the ATR bands to determine where to set our stop loss. Remember that this band is estimating the volatility of the market, preventing us from placing stops in areas the market is likely to fluctuate within, and our bands are set to 1.5 times market volatility. Now that we have a stop loss, we can target the high that we established as our first target. And once price gets to the swing point, we can exit our trades or move our stops to break even or allow the trade to run to other targets. Here is another example. We can see the trend is bearish based on the baseline being above the candles and the color being pink. So now we want to wait for a retracement to establish the low. Here we have a sell signal, but there is no low to target, so we wait for another opportunity. And now we can see that a low was established before this sell signal was printed. We can set stops at the ATR band and target the recent low. Once there, move stops to break even and allow the trade to run to a higher risk to reward. This is a great starting point on how to use this indicator properly. However, it does not even come close to comparing to the next method we are about to share with you. But before that, if you're enjoying the video, don't forget to like and subscribe to not miss out on future videos, where we will be sharing even more powerful trading strategies and secret indicators you have never heard of. And if you would like to try the #1 premium indicator on TradingView by xauusd risk-free for 30 days, you can use the link in the video description. Your continued support really helps the channel. For this next method, we will need the xauusd oscillator matrix indicator. Go ahead and add it to the chart. This indicator has two features we will be combining with the SSL hybrid indicator for this amazing strategy. This is a very advanced and technical indicator, however for today we will keep it simple and only focus on two basic methods of reading the indicator, so we went ahead and disabled all other features. The first feature we're using is called the money flow, and it allows us to see if money is coming in or out of the market. The next feature we'll be using is this real-time divergence. A divergence here is when the oscillator trends in a direction different from price and is usually an early indication of market reversals. Unlike most indicators that detect divergences several candles after it has happened, this indicator detects divergences in real time. So here is the strategy. For buy trades, we want the oscillator matrix to detect a bullish divergence. Once this is detected, we want to ensure that the market does not make any significant lower lows beyond that level. Next, we want the SSL baseline to change to bullish, confirming the divergence change. Next, we want a buy signal to be plotted on the chart in bullish money flow. But it is very important to ensure that when this buy signal is detected, there is already an established high in the market to target. Once those conditions are met, we can execute our trade. Set stop slightly below at the ATR band and target a 1 to 2 risk to reward. Here is another example. For a sell position, we want a bearish divergence to be detected indicating price is likely to reverse. Next, we want the SSL baseline to turn pink indicating a bearish trend. Next, if a sell label is plotted, it needs to be in a bearish money flow, and we want to ensure that there is already an established low to target before executing our trade. And we want to target a 1 to 2 risk to reward or more. It is important to note that when executing your trade, your entry candle needs to be above the SSL line or below. No part of the body of the entry candle should be within the baseline. This helps to ensure the market is not ranging. We hope you enjoyed this video on the SSL indicator, and if you would like to try the oscillator matrix used in one of the strategies today, the link is in the video description, and that link will also provide you with access to the signals and overlays indicator and the price action concepts indicator, which are some of the best premium indicators on TradingView by xauusd, and that link will allow you to try them for 30 days risk-free. Don't forget that indicators are just one part of you becoming successful in trading, and indicators should always be used alongside your analysis. Don't forget to like and subscribe, and we will see you again in the next video.